Today, I'm going to talk about U.S. stocks. Okay, let's move on here. Stocks, the final run, final capitulation top is here. Could last for weeks, months, or even years. If you remember, the top in the Tokyo market lasted for 5 years from 85 to 90. PE multiples are already at 20 times in the face of falling earnings. That's the top of a 50-year range. No one ever gets rich buying at a 20 multiple unless they're a day trader or a month trader like I am. Stocks are melting up in the face of plunging earnings, which always ends in tears. The bait of a China trade deal and ultra low interest rates is pulling buyers in off the sidelines. It all adds up to a marginal new high in the index with little confidence or excitement, a classic market topping indicator. Trading volume is falling in up markets, rising in down markets. That's always negative. Bottom line, marginal new high and then a 7% down market for the next 3 months, then highs propelled by the final real trade deal. S&P 500, any wisdom here? Bill Davis, I see we've passed and passed again and surpassed all of your upside targets, as have mine been.
Well, actually, no. I'm looking for 31 and a quarter, so we are just under it. And I think yesterday we got within 23 points of that objective, and we're kind of stalling. So my feeling is we may make one more punch up, and then that's where we'll start to see the market sell off and pull back.
Yeah, my indicators say that we could keep trying to push the new highs for another couple of weeks, and then we finally get a point of exhaustion. So I'm doing nothing until then. The risk reward of initiating new trades right here is terrible. Have to be nuts to be buying anything from the long side, having missed the 3 big dips that we got this year. Dow average, highs.
But by the way, John, let me interject this. I've been writing about this probably for the last 2 weeks. The technical aspect right now is that we're seeing tremendous contractions in the market.
Oh, yeah.
Okay, as we continue to creep higher, which is a very bearish sign. All right.
Yeah.
The problem right now is we haven't had a trigger yet to sell off. And the market, even on these days when we pull back a little bit, the market does recapture those losses. So, just be careful when we see a big down day. I think that'll be the start of it.
Right, exactly. No, bearish indicators are a dime a dozen right now. And the only bullish indicator is the index. The money coming in every day. So that will last until it doesn't. Russell 2000 already having difficulty breaking out, and even then that was a marginal new high. So that could really be seen as more of a top of a range. NASDAQ, that is a clean new high, classic breakout. VIX just sitting on the bottom. And again, this is saying another couple of weeks, and then we take a shot at the upside. Perfectly corresponds with the time requirement for a bottom, which is usually a month or so, and we're maybe 2 weeks into that already. Microsoft earnings beat, new high, and of course it's been the safest stock in the market for a couple of years now. And all of you recall when you bought a subscription to this newsletter, first thing you got was a recommendation to buy Microsoft, and those have been working well. We're at an all-time high right here. Facebook, break out of the recent range, looking like a trend, and oh yes, this is called a golden cross, breaking out to the upside in the next week or two. Apple just keeps going up every day, and here's a question from Bill in St. Louis. Will Apple keep going up every day forever? And the answer is no. Don't forget, Apple can have 40% pullbacks at any time without warning. Usually they happen with new product launches. I would think we're getting overextended here. If somehow we get a 10 or 20% pullback in Apple next year, I'd be jumping back into that. for the product launch next September, when we'll probably hit 200, which has been my target for a very long time. Alphabet grinding up, not at new highs, but obviously the trend is their friend here. Amazon kind of sitting on a bottom after a horrible Christmas forecast. Boy, retailing is so bad, people don't even want to buy Amazon anymore, so I'll stay away from it. PayPal CEO resigned, got a nice sell-off there. Probably not a bad buy here, and I know Arthur is looking at this for alongside Trade Alert on a good down day. NVIDIA off to the races, new highs, as is the rest of the chip sector. Salesforce finally is breaking out of a 1 year range. It's had a heck of a move here, but I don't want to touch it up here. Boeing, this is turning into a nice little money machine. We bought the move down to 325 here. We bought the move down to 325 here. We sold up here. So yeah, very wide range. I doubt we go back to test the old lows. The word is they start flying again in January. So I'm just going to let our current position run into expiration at max profit on Friday, and then we'll wait. If for some reason they delay that relaunch, then it's back to 325 again, and then we'll buy again. By the way, Bill, I don't know if you know this, but guess which company has had the largest cash flow in the world for the last 20 years?
I would guess Apple.
It's Boeing. Don't forget, 20 years ago, Apple was a tiny company on the edge of bankruptcy. Boeing has increased its dividend every year for the last 15 years, 15% a year, and has also returned more to shareholders than any other company in the world. I didn't know that, but I heard a bullish argument on Boeing at about 2 o'clock in the morning this morning. So just thought I'd pass that on. That's why I keep buying the dips. That and the fact that this company saved my life many times by having their airplanes hold together when I was riding in them. Okay, Disney, yeah, there's your launch of Disney Plus spike. And of course, the site crashed on overwhelming volume. I'm looking to buy Disney on dips. I think this is going to be a big story going into next year. Adobe, been bullish on that for some time and got the gap up there. And by the way, you see what golden crosses do when the 50-day breaks through the, or the 200-day breaks the 50-day, the upside, you get these big giant gaps up. Bill, that on Adobe here, that's a pretty classic golden cross, isn't it?
Yeah, I'd say so. Yeah.
So those we're watching for all the time, of course, big move here in industrials on backing the recession scenario out of the picture and also China trade deal. US deal getting the same kind of move, 10 up to 13. That's almost a 40% move off the bottom. But boy, did you have to take some pain to hold on to that trade. Walmart just kind of grinding sideways, had a short in there and covered it when we looked like markets were going to break to new high a few weeks ago. Macy's, I got a question here on Macy's. Let's see if I can find it. Yes, let's see. And this is Thomas is asking, is it time to make short-term buy of beaten down retail names like Macy's? No. I am a person who trades with the long-term trend at all times. Most people are not agile enough or smart enough to do counter trend trades and make money, and the risk reward is terrible. You make a mistake, you get killed on those. I think this company's having a going out of business sale unless we enter a major increase in economic growth in this country, which is nowhere in the cards. So if anything, I'm looking for a sharp rally to sell into. Might want to test that 200-day moving average up there at 20 at some point. That would be a great selling place. But no, don't want to touch the retailers right here. And retailers have been kind to us this year on the short side. Okay, Tesla, yeah, big moves in Tesla. The stock has gone up 100%. It has doubled in 4 months or 5 months. Just a stunning move. It takes stunning, once in a lifetime moves for me to lose money on shorts. And that's what happened. You know, we stopped out of our 260, 270 put spread when we were still $10 in the money. I wasn't going to stand in the way of this one. And this is where I did bet against the counter trend trade and a long-term trend, and it'll cost me money. You know, eventually, I think this thing goes to 2,500. So if we get the breakout above 490, we could add 100 or 200 points very quickly. And of course, the shorts have been completely wiped out in this company, which at one point was 30% of the outstanding float of the shares, because Elon Musk loves killing shorts. Southwest Air, big 737 buyer. They think the 737 is coming back online in 2 months, for sure. Delta Airlines also doing well. Transports, new highs. Healthcare. By the way, since I have launched the biotech letter, biotech has gone up every day for 6 weeks. And every single stock we recommended, there are about a dozen of them, have all gone up. I mean, you can't get a better newsletter launched than that. And I'm glad that so many of you people participated. Goldman Sachs, really more of a range still. If we can't break out of this range soon, we won't. We'll go back and test the bottom. Palo Alto, yeah, got all of those hackers. This has been a great performer, up 20%. Since the beginning of October. Consumer discretionary is kind of grinding sideways, should be doing better than this in this kind of market. Europe off to the races, Japan rocketing. You know, international stocks do much better in these global liquidity driven markets than ours, but they're also much quicker to give back the gains once the dollar starts to strengthen again. Emerging markets, also a great move there. I hope all of you found this helpful, and hopefully it has also improved your trading. This is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.